Diversifying your investment portfolio is very crucial, and understanding the different asset classes that you can put your money in can help you make more and better informed decisions. When we talk about investing, many people associate investing with buying stocks or investing in real estate. But there are many assets, there are several assets that you can invest in today that offer you different levels of risk as well as different levels of returns. Hi, and welcome back to Atlas Crossings. And in today's video, we're going to be talking about assets that you can invest in 2024 that can generate you substantial returns. Stocks represent an ownership of a company. So when you buy stocks or shares in a company, you're essentially owning a piece of that company. It's like looking at the very big pie. When you buy into the pie, you're taking a small piece. When you buy a share, you're taking a small piece of the company, which allows you ownership of the company with that small piece. Now, if you take an example of buying shares in Apple or buying shares in Microsoft or Tesla, you're basically owning a small piece of these companies. Now, the shares or the stocks that you buy can actually offer you substantial returns. However, they can offer or expose you to high levels of risk. So it's important that you understand that there are different grades of stocks that you can buy. And there are different levels or exposures of risk. There are also different sort of returns you can actually get from these different stocks. Investing in stocks can be done through stock picking, where you're picking individual stocks. So you can identify various companies that you feel or you understand have the potential for growth or stability. And then you can pick these different stocks or companies and then invest in them by buying shares in them. But you can also invest by investing in through mutual funds or through ETFs. Now, this allows you to actually track an index or allows you to reflect an index through your investments or having a compilation or a combination of different types of stocks. Now, what this offers you is a range of diversification, which can reduce the level of risk you're exposed to. Now, data shows that the annualized return on the S&P 500 can be between 9 to 12%. 12% with dividends reinvested. But it's also and always important that you do your research and speak to a financial advisor, a financial expert, before you invest in these the different assets we'll talk about today. The next asset you can invest in 2024 is bonds. Now, bonds are basically providing loans to either the government or corporations. So you have government bonds, you have corporate bonds. As an investor, when you buy bonds, you're basically providing loan to the borrower. You're providing loan to the government or to corporations. So if governments are looking for money, if governments are looking for money to invest or to build infrastructure or to address some of what they've stated in their budget, one way they can do that is to raise bonds. So they can do that, and as an investor, buying bonds will mean that you are providing loans to the government. But corporations can also do that. Corporations like Apple, Ford, they can decide that they are trying to raise additional funds and they're doing this through debt, and they can raise bonds. And when they sell those bonds, they're basically borrowers. And as an investor, you buying the bond means that you are providing the loan to the corporation or to the government. Now, it is believed that government bonds, because governments are seen to be sovereign and governments are technically not supposed to fail, it is saying that government bonds are safer than corporate bonds. So typically, in that sense, is you would see and can see that with government bonds, the returns on government bonds will be lower than the returns that you would see with corporate bonds typically. Now, with you buying bonds, you were expecting periodic payments, coupon payments, or interest payments. And at the end of the day, you will also get back the face value or the par value of the bond that you bought. Now, if we compare bonds and stocks or equities, we over time see that equity has in more recent times, in fact, since 2008, generated higher returns than bonds, but bonds are, of course, seen as safer investments and can actually be impacted by several policies, government policies. And in 2024, with interest rates being high, 5% in some regions, it is seen that bonds are, can be a better investment compared to the volatility of the stock market, seen in the stock market. Now that takes us to the next point, and that is real estate. So if we think about real estate away from the traditional sense, the traditional sense basically is that investors get a property and they rent them out to tenants. Now, that is the typical way you'll find investments in real estate. However, if we think about how real estates are functioning today and how people are generating more returns, you talk about service accommodations where whether it's through Airbnb, through Booking.com, or any other sort of strategy or framework or platform that people rent their properties, but the service accommodation business being thought of can be seen to be generating more income than the traditional rental property. However, it comes with its own headaches. Comes with its own risk. Again, it's important that you understand this space before you think about getting into rental businesses. But real estate has always been the core of what people understand as an investment, and might not be such a problem. And you will find that this is a market where you will find a lot of people understanding how real estate works. So it might be helpful to also speak to people who have been in this business, speak to people who are into Airbnb and service accommodations. We actually have a really rich video that we've done before on investing in Airbnb. I'll drop the link in the comment so that you can go in the description so you can go back and watch that video if you're looking to get into service accommodation investment. But beyond investing in the physical asset themselves, you can invest in a real estate investment trust, which allows you to invest in directly, where you don't have to manage the properties themselves. Well, what some of you might not know is that holding cash is also a form of investment. Holding cash or cash equivalents can be one of the safest ways of holding money. Now, if we think about in the short term, being able to address emergencies, being able to address any financial obligations that are just around the corner, holding cash or cash equivalent assets can actually be a good thing. And the cash equivalent assets are things that you can easily liquidate, things you can easily sell that will generate cash. If you think about in some regions, treasury bills is an example, investments in money markets in general, where they're very short term and you can easily be converted into cash. Now, while this might not generate significant returns, especially with reflections of interest rates at different points in time, holding cash can help you take advantage of certain investment opportunities. So it's always important that beyond thinking about emergencies, beyond thinking about your financial obligations, cash can be an opportunity for you to address any investment opportunities that can come your way. But remember, holding cash can mean that you're exposed to risk. While it can be the safest asset to hold or to have, you are exposed to different levels of risk. Inflation being an example, inflation can erode the value of the money you hold. So for long-term investing, think beyond cash. For long-term investing, think about assets that have the potential to grow, that have the potential to take into account inflation. Now, this next asset is a very controversial asset. You would have different people from different school of thought that would speak differently about cryptocurrencies. But no matter what we think about cryptocurrencies, they remain an asset that can generate returns for investors. We've had several stories, and we can say cryptocurrencies have had their good days and they've also had their bad days. You have people who would say to you they would not touch a cryptocurrency for no reason because they don't understand it. You also have people who are willing to explore and who are willing to take on, that level of risk. And while you might have, more people talk about stocks or more people talk about real estate, they might expose you to as much risk as cryptocurrencies might do. So it's important that you understand for all the assets how much risk you could be exposed to, how much money you could gain, and how much money you could also lose. And for all of these assets, you can lose all of your money or you can get less than what you invested in. So it's important that you bear that in mind. Now, moving on to other innovative assets that you can invest in 2024, crowdfunding. Crowdfunding platforms allows you to invest in startups. It could be companies that are engaged in any form of activities, whether real estate or tech or restaurants. You could actually invest in these startups using crowdfunding platforms. Crowdfunding platforms work by pulling funds together from various investors, investing small or large amounts of money into a company, basically to help the company start up. The great thing about crowdfunding for startup companies is that they can actually raise the required amount to get them to start their business operations. Crowdfunding can be high risk and high reward. But beyond the financial returns, investing in crowdfunding businesses or small businesses on crowdfunding could mean that you're actually supporting innovation, you're supporting these small businesses to have the potential to compete in a larger market. Now, an example of a crowdfunding platform is Kickstarter or Indiegogo. Investing in your own business or in other private businesses can be a way to generate substantial wealth, but it's important that you understand the industry, the sector that your business is going to operate in, and to have a clear business plan and strategy to get into that market and to grow your business. For example, starting your own online store, whether selling on Shopify or Amazon, or starting your own restaurant, your local restaurant. It could be that you're filling a gap. You understand that there is a type of restaurant or a coffee store that you understand there is a gap in that market, and you can use that to fill in the gap with your own business. Other things you can do through this process is by supporting other private businesses. So you can support other businesses by using venture capital investment strategies or business angel investment strategies. And these allow you to come on board, whether as an advisory to the company or providing technical support, while also providing some financial support to these businesses. And finally, there are other assets that you can invest in, which we've put under alternative investments. So we won't cover this in much details in this video, but we'll take out another time and cover these different elements in a different video. But they remain a very significant part, and possibly investment assets you probably haven't heard of. One of them is investing in talents. Investing in talents can mean that you're investing in individuals, you're investing in a team that technically has the potential within a specific sector. It can be that you look for agencies or facilities or incubators where this talent is being grown, and invest in these talents through different platforms. An example here is funding a promising artist, or funding an athlete, or funding a tech company. Essentially, you can be investing in the specific talents, but understanding that there are also levels of risk. Again, you have to have a very keen understanding to actually spot great talent, and there are quite a lot of people who essentially have some of these talents. Now, for anyone who has ever watched America's Got Talent or British Got Talent, what you basically see Samuel Cowell do is identifying, talents in some cases. And, some of these individuals go on to basically being exceptional, even when maybe in the first auditions, it didn't look that great. So there could be potentials for, and there are, platforms that are being created in recent times that allow investors to actually invest in talents. Another alternative investment is investing in films or art. Now, again, this might not be something some of you might have heard but quite a lot of investors invest in movies, where you see producers and executive producers. You have people that are keen in investing in great movies. They can do that by identifying the right directors, identifying the right stories. There are actually crowdfunding platforms that allow you to invest in films. An example of one of those platforms is Seed and Spark. If you check Seed and Spark, there are opportunities for you to identify stories, identify films that you can actually invest in through a crowdfunding platform. When people hear about art, they always think about the Mona Lisa sort of paintings and how far-fetched and far-reaching investing in art can actually be. But that's not the case in 2024. There are platforms that can allow you to actually own a piece of a painting or an artwork. In fact, with the NFTs, but you also have platforms like Masterworks that allow you to invest without owning the entire painting. The painting is worth, say, $1 million. You can actually own a piece of that painting. There can be minimum investment of $500 or $1,000, and you can invest as little as $500 to own a piece of that painting. And when that painting is sold off, you can see what the returns are. If you want to sell off your own part of your investments, you can see what you can get from it as the value of the painting continues to rise. As you can see, there are several assets that you can invest in, but these are some of the assets that you can invest in 2024 that can help you diversify your portfolio. But it's important that you understand these different assets in more details. It's important that you speak to a financial advisor. This is not providing you financial advice. This is basically pointing you to understand the different assets that exist and what they entail. They can generate different levels of returns for you, but they can also expose you to different levels of risk. So always do your own research before you make investments in any assets at all. How many of these assets did you know before now? Drop a comment in the comment section below. Thank you for watching, and don't forget to continue to show up.